What's going on, guys? So I want to do a little bit of technical analysis on Tesla. So Tesla did find a little bit of a demand zone on Friday where we kind of bounced and recovered along with the overall market. So is this dead cat bounce going to be continued? Is the short-term selling going to be done? That is yet to be told. We still need more information, okay? One green day is not enough to predict whether the bottom is in or whether we are going to continue this rally to the upside. So if we just take a look at the bigger overall picture, the NASDAQ 100, the triple Qs ETF is trading below the 200-day moving average as well as the 50-day moving average. With that being said, anytime we're trading below the 200-day moving average, we always have to look for these, green days or these dead cat bounces to be kind of faded off in the days prior. Now, a dead cat bounce can last anywhere between a few hours. It can last a few days. Maybe it can last a week. It all depends until the NASDAQ 100 and the rest of the ETFs, like the S&P 500, the IWM, depending on what stock you're trading, could be the Dow. Until we start reclaiming some of these supply zones, meaning the 50-day moving average, the 5, the 10, the 20, the 200 especially is very, very important. It's too hard to predict whether the bottom is in. So what I'm going to be looking at here on Tesla, I'm going to be making this very, very simple. What I have is a couple of demand and supply zones. If you don't know what supply and demand is, I'm going to make another video kind of talking a little bit more about that in depth. But basically, we're just going to kind of follow price action and see where do buyers step in, where are they comfortable coming in and buying stock, and where do they typically like to sell? Where are sellers sitting at? So your sellers and where we're going to have resistance is always going to be your supply. Where buyers are going to be sitting at, being comfortable buying that stock is going to be your demand zone. So there's numerous different ways you can draw out supply and demand zones depending on the time frame that you're playing. I really like to do 1 hour time zones. I kind of like to use the 4 hour time zone blocks, even the daily charts to kind of find my bigger macro areas of supply and demand. And then I kind of like to dive into those 5 minute charts and kind of see, the intraday action. Where are we really stopping? Are we confirming some of these supply and demand zones? And where can we possibly find a trade intraday? So we kind of want to have those big macro levels already drawn out. So I'm going to give you a couple of examples from just this last 5-6 trading days of where we could have potentially found some trades. So if we do go look at Friday, we did find this little bit of demand down here. We did have this initial washout in the pre-market into opening bell all the way down to $792. This is where this bottom wick is going to form down here. So I'm going to start to draw my demand zone here, because as price action came down into this range, you could see that the buyers really pushed it out of here. And you can see once we made that little push higher, we did come into the 20-day moving average on the 1 hour time frame, kind of tested this level. Let's get out of this demand zone. Do we have enough buyers? And quickly came back into the zone. And you can see once we came back that first time and tested and held, this was an area where you could have entered in getting long on the stock. So you never just want to jump in really on that first move unless you're a scalper, unless you're experienced with good risk management and you're not, kind of entering in your size, because that first push out of a demand zone can kind of fake you out. It can push out and then quickly pull back. And if the buyers are not there, then you're going to see you quickly wash out below this demand zone. And then that's an area of opportunity where you can potentially go short when the bulls lost an area of demand. So with this being said, as we pushed out of here at 7 a.m. Pacific Standard Time, we made this nice push into the 20-day moving average, quickly pulled back in the next 1, 2, 3, 4 hours. Here you can see 4 hours of the day, we kind of pulled back. And then towards the end of the day, realistically, the last hour of the day, we kind of had that nice strong push. We kind of back tested these areas that we broke out from earlier intraday, and then we kind of made that push. So what you would be kind of looking for here is, if you know that we broke out of this demand zone, we found some sort of support, and now we've broken out, what you would be doing is looking for the price action to come back into and test this demand zone. And as we push out the second time is where you're going to want to take your trade. So as we pushed in here into 11 o'clock in the morning Pacific Standard Time, you can see the wick start to form. And as we started to creep out of this demand zone is when you could have taken a buy order here. That last hour candle opens up, and realistically, if you would have got into Tesla between 8:30 and around 8:35, Tesla did run all the way up to 846, which is a 15-point move on Tesla. So depending on if you're playing equities and or contracts, that was a fantastic move in the last hour of the day. You could have caught yourself a nice gain there. Tesla does look higher. We are going to have a little in between resistance that we're going to need to break out of. 857 and 880 is going to be the area where Tesla could be a little bit choppy. I'd kind of stay away from this zone. I would want to personally get over $880, see us break this level, come back and back test. And if we can get that push off, that's the trade I'm going to want to take long on Tesla, which is going to be $880 with the potential price target back up into the 900s. So definitely something to keep an eye on this week. If we do kind of go a little bit further back here and we kind of look at Wednesday's price action, we were just trading in between demand and supply here. So there's not really a trade. Typically when you're range bound trading, anytime we're at the top of supply here is where you want to put on your short positions into covering into this demand zone. And when we start to come out of the demand zone is when you're going to want to really get long. It's just a good trade from a risk to reward aspect. So you can see here as we got into Wednesday session, we quickly came up into this supply zone, which was a previous area going back to last week, a previous area of support. So all of last week, Tesla was kind of holding this zone here, this 980 to 964 zone. Tesla was holding this area, holding this area, holding this area. When we did come into this zone and Tesla could no longer hold and we lost this zone, you can see then that's where we started to lose and started to really accelerate to the downside. So if you were looking at it from last week's perspective here, this would have been your demand zone, which currently this is our demand zone down here, but this would have been your demand zone here. And you could have seen as Tesla came into the demand zone and tried to bounce out, and then quickly failed, losing this demand zone, this is where you're going to want to get short with an area of opportunity to go down to that next demand zone. As soon as we lost the area of support, the support zone here is when you're going to want to go short and ride that to the downside. Obviously, if we come back up into this area of supply and we get rejected, you can take on another short position. However, if we break out, come back and hold, then you can start to go long. So this was an area of opportunity to go short as soon as we lost this previous demand zone, which is now going to turn into a level of supply, meaning a level of resistance. You can see here going into Tuesday and Thursday session, it was acting as a level of resistance. So previous levels of support now started to act as current levels of resistance. So in this case here on Wednesday, when we came back into this supply zone and could not break above and quickly backtest to hold, you knew that once we lost this supply zone here, you could potentially go short with an area of opportunity to kind of cover your position into that demand zone. As we found some support here between 821 and 792, as soon as this area started to hold and we started to push higher and make a higher high and did not lose this zone and continue trending to the downside, you kind of knew that if Tesla was going to hold this demand zone that we had on Friday, you could potentially get long here. And if you did get long off the bottom here, as soon as we kind of touched down here, created this demand zone as buyers really started to step in, you could have bought on the way out of this support 822 and ridden this first hour candle all the way up to 850. Obviously, again, you need to be a little bit experienced and kind of have a little bit of screen time behind you before you just start taking these plays, just due to the fact that if you did not know that you were going to come into a previous area of support that was going to act as resistance here, you would have not known to take profits there. You could have held, this could have scared you, and you could have sold for a loss. So just kind of giving you guys a brief overview of a demand and a supply zone and how you can play these using the 1 hour time frame. I really like using the 1 hour time frame to kind of set up and align and monitor the supply and demand. But if we take a look here and we kind of look at the smaller time frame and take a look at a 5-minute chart here, you can really start to see the trends lay out. So if we just go back to Wednesday, you can see at the middle of the range here, and every time Tesla tested this supply zone, it was rejected. So on this run up here, when we got rejected and made our way out of this supply zone, you could have taken a short here, okay, covered your position as profits seen fit. Depends on if you're looking for a scalp or a day trade. Maybe you're looking to swing. If you're a swing trader, what you're doing here is as we lose and reject the supply zone, you're looking to just come down to the demand. Okay. So you're going to look to cover your position either halfway or down here towards the bottom of the range. If you're looking to go long, none of this stuff and none of this price action here is going to entice you to take a trade, just due to the fact that you know you are below supply. Tesla is still going to need to break out, come back into this zone, hold, and then push higher. And that's when you're going to want to go long. If you're looking for a long play setup, you know that as soon as we come down here, tested it one time, tested this zone twice, tested this zone 3 times, you could have potentially taken a trade each time we come out of the demand zone. So I kind of like to leave these levels of supply and demand on my chart until we kind of really break above these levels or break down. So currently we're in between that range of 987 and 792. So this is a big, nice range for Tesla, a good range that we can play short and or long until we kind of confirm price action and either start to push higher or start to move lower. So I'm kind of just leave these levels on my chart and play them accordingly, depending where we're at in the range. I hope this video helps, guys. If you are looking for a strategy and a particular way to trade, to be profitable, to cut losses, to manage your risk, to manage your emotions, I do have a trading course. Visit my website, evolutiontraders.com. Great, fantastic content there. 22 hours and over 2.5 videos worth of content that'll really get you started in helping you try to become a profitable trader. Also, if you're looking to join a Discord, my Discord is down in the description box below, completely free of charge to join. However, I do have a gold members section in that Discord, which is a paid service, $20 a month. It's not a subscription-based service, so basically you could pay for $20 this month. You don't have to worry about getting billed next month. And if you want to rejoin, you just simply go back to the website and buy another gold members package. But in that gold members package, what you're going to get is intraday outlooks, kind of like what I'm showing you here, showing you the plays that I'm taking, showing you some of the zones that we can play. Also doing one-on-one mentorship, also doing live trading where I'm jumping on voice call and kind of sharing my screen intraday, showing you guys the levels that I'm looking at. If that interests you, it's $20 a month. You can find that on my website, evolutiontraders.com. But until next time, guys, please do me a favor, smash the thumbs up button, subscribe to my channel, and I will see you guys all on the next video.